Hi, everybody. Back at the Mortgage One Studios. This is Scott Riley with the Market Update Desk, March 5th. Well, we're getting through some of our insurance quotes and repairs to the house that we've got going on from the water leak. All I've got to say is thank goodness I have a great local insurance agent. It's just another reminder local is so important, not internet based. You just don't get the same customer service and client focused services that you need. So, shout out to Brad with Shield Agency for helping me out through all this fun stuff. So today, if you haven't been following Bitcoin, Bitcoin's at about an 18-month high right now, breaking through about 67,000. It's very interesting. It's been a huge run in the crypto market, and kind of curious where this is going to go to see if we have any pullback. We do have earnings season still coming out this week with retailers. There's some merger talk out there with Macys. Walmart is reporting that that stock ran today a little bit. So we're also seeing the Magnificent Seven, the big tech, mega tech companies, kind of retreating just a little bit here. They've had such a gigantic run up the last probably 4.5 months. Kind of curious if we get a little bit of a pullback on those stock prices because they've just been roaring. In fact, most of the stock gains that we've had over the last 4.5 months has been centered within the Magnificent Seven. So very, very interesting what's going on with the Dow and NAS and S&P out there. Today we had voting member, Atlanta voting member, I should say, Raphael Bostic, come out and give some comments. Specifically indicated he's in no rush to begin cutting rates. Shocker, that's what we've been hearing time and time again, especially from the Hawks. And he thinks it would be appropriate to cut 50 basis points in the second half of the year, but not consecutively. So he's talking about 225 basis point cuts, which is tiny compared to what the market really needs, and not in consecutive meetings. Also indicated there's no rush to end quantitative tightening or start to restrict it. And there's also no rush to start to taper off the balance sheet. This is contradictory to what we really thought we'd start to hear, where QT or quantitative tightening was going to start to wind down. A lot, specifically, they also have the reverse repo market, which we talked about yesterday, and that's been getting drained and offset. It has been offsetting these effects, but that now it's down so low in its levels that if the Fed doesn't start to adjust their quantitative tightening soon, we could start to see some negative impacts at the bank level, specifically those mid-level banks. We saw it last year with Signature, SVP, First Community, a couple others. So the commentary, specifically out of the March meeting, is going to be very critical to how the market's going to react. We know there's not going to be a cut, but the commentary specifically regarding quantitative tightening, reverse repo market, starting to reduce the balance sheet, those are going to be very important comments to watch. This week, tomorrow we get the ADP payroll. That's going to lead the way into Friday's BLS jobs report. So the slower start to the week with data ramps up big time. We also get to hear Chairman Powell's comments tomorrow. We get the JOLTS report Thursday, jobless claims on Thursday. So hold tight. Now on the technical side, mortgage bonds are testing their 25-day moving average once again. We've been bouncing against that. If we can get some momentum here, we've got some room to run to get better mortgage rates. The 10-year bond broke beneath the 25 and the 200-day moving averages, which is a significant development on the technical side. Now, a lot's going to depend on what we get from the ADP payroll and the BLS jobs report, Chairman Powell's comments, JOLTS report. Those are going to play a big part of it. The very curious thing is, will we get revisions downward from January's smoking hot jobs report of 330 plus thousand jobs, which we know was artificial, not real because of the seasonal adjustments and also the birth death model. It's just not a real number. So will we get these revisions downward, and will the market give us back some of what we lost from what the initial jobs report was. So we're watching that all real close. Give us a call. We're happy to help you out, go into depth more on this. The Market Update Desk is your original local focused real estate and market backed information source. We look forward to educating you, helping you get all this information. Give us a call. We'll help you get pre approved and get some offers accepted. 616 293 2189. We hope you have a great afternoon.